Are live. Hello, everybody. This is our first live stream here in Easton Park. And I'm really excited because we have all these wonderful guests here to really talk about what's happening here in the community that we live in. So before we get started, we do have our special guests, Mike and Danette Castaneda. But before we get to them, I do want to talk a little bit about us. Gabby, if you want to go ahead and introduce yourself.
Sure. I'm Gabby Leite. I was raised for the most part in the Dallas-Fort Worth area, but my family is from Brazil. And one of the reasons I love Austin is because of the warmth of the people here. I just find it to be something that feels like home to me. And I've been here since 2018 and built my business from the ground up just based on referrals and on learning from other fantastic agents like Liza and Araceli and many others that I have.
Not because of my last name, no.
Not just from my last name, although that is a really cool coincidence.
Yeah.
But yeah, no, I love what I do. I feel like I have the best job in the world, and I'm excited to be here with you guys and just be a resource for our neighborhood and keep everybody up to date, because I feel like that's empowering and important.
Definitely. Thank you so much, Gabby. And Araceli, go ahead, girl.
Hi, I'm Araceli Frazier. I always like to introduce myself like that. I just think my name has this nice ring to it. So I've been in Austin for about 10 years, most recently from Colorado Springs. It's so funny because when I moved to Austin, I was like, I'm either going to be here for 2 years or forever. So
Yeah.
I've been here 10 years, so I guess it's forever now. Been with Realty Austin a couple years. Just very fortunate to live in this neighborhood and have so many wonderful people that are my neighbors and friends and clients and all that good stuff. So excited to be here for everyone.
Awesome. Thank you so much, Araceli. And guys, I'm Liza Brazel, born and raised here in Austin. So apparently I'm a unicorn. I grew up in Montopolis and I now reside here in Easton Park, like many others here that live in the community. We're realtors and professionals here in the community. So that is me. Now we're going to, again, guys, before we get to our special guest, Mike and Danette, we are going to jump in with Aaron. Aaron, if you want to go ahead and introduce yourself and then tell us a little bit about what you can share as far as tips are concerned with HVAC and what neighbors should know when it comes to anything HVAC and maintenance.
Hi, my name's Aaron Rodriguez. I've lived in the neighborhood since 2018. I'm over in Bryant Park. Many of you, I've actually been in your homes when y'all been in a bind, and sometimes less than convenient circumstances. As far as this coming winter, main things to know as a homeowner, first and foremost, check the condition of your filters. And big tip, turn on your heater. Make sure it actually works and you'll complete a heating cycle before you actually need it so that it can be addressed before, the ice storm hits and nobody can get to you. That's a big thing. A lot of times, well, here's a fun anecdote. They asked me to kind of speak to some things you find in new construction. Over in Union Park West a couple years ago, during the first ice apocalypse, right? I started seeing all this chatter on this thread on the neighborhood Facebook page about nobody had any heat over there. And I, communicated with them just virtually like this, hey, somebody take some pictures. And I found that this builder's contractor had one wire out of place in their zone control board. And it's like, this is at 11:30 at night, mind you. That one guy changed it, it worked. And then everybody else followed the step-by-step instructions. And in about 20 minutes, about 25 homeowners all of a sudden had heat when they didn't. So,
oh my goodness.
Little things like that. Tips as far as, that's the main things there. Check your filter. Make sure your heater actually turns on so it can be addressed. Wouldn't be a bad idea to, have a contractor such as myself or whoever you use, if you haven't done so already, get some maintenance, just get some eyes on it to make sure that we can identify any problems before they actually become problems and before, it's 11:30 at night on a Sunday and
Right.
Everybody's snowed in. Worst comes to worst, say we do lose power, less prep for that. I mean, if we're going to hit weeks of 19 degrees, go right now to your local hardware store, Lowe's, Home Depot, both of those are close by, and get your hose bed covers if you don't already have them. What happens a lot of times is, people wait until, now it's 19 degrees. Now I need to address these things. You go to Home Depot and they've been sold out.
Yeah.
Right.
And that's a great reminder too, because we're about to have our first weekend where we're going to dip into the 30s and 40s of with a wind chill.
Ooh,
so this is a really well-timed reminder. I would
Yeah.
say that the idea of turning on the heater now before it gets freezing is
on that cycle, right? I didn't know that either, Erin. So I'll need to do that. Ooh,
yeah, I mean, it's the old saying: an ounce of prevention's worth a pound of cure, right?
Right.
So you want to test these things first. Now, again, that's to protect your pipes. Worst comes to worst, though, and we lose power. We were fortunate we haven't yet. I mean, there's been the little things where, you know, a construction worker hit something they shouldn't have, or somebody's working on the lines. But we in Easton Park did not have our power turned off, where right across the street, they were without power for a week in 19-degree weather. Grid failure, who knows? But luckily, I'm guessing because of our proximity to the airport, maybe. I don't know why. For whatever reason, we did not get shut off where a lot of other people did. Right. So we were fortunate there, but we can't always guarantee that we're going to be fortunate there. I'm not saying go hoard, but make sure you've got some bottled water. Mm-hmm. Recommend, if you know freezing is coming, put some of that in your freezer. If you've got a deep freeze some of it there. Why? Because if power goes out, right, you can actually put these bottles in the refrigerator, keep them in the freezer. It keeps all of your perishables good for longer. And then as it melts, you've got drinking water.
Right.
If you know it's going to be that way, fill up a bathtub, one that you don't use necessarily, with water, so you've got something to flush your toilets with.
Yeah.
Just little things like that. Toilet paper, water, those are going to be the two things that, you know, get removed from the shelves really quickly. Everybody, any cataclysm, that's the two things that people go for. That's what's going to save your life.
Yeah.
If the volcano all of a sudden erupts again, everybody wants toilet paper. So, hey, that's
a bidet.
Yeah, exactly. You want something to be able to flush your toilet, so bathtub full of water. Another thing, bagged ice in the washing machine. There's a good way to actually store some more ice, because your washing machine's not going to run, but you got a big appliance that's watertight that you can pour a bunch of bags of ice in, and as it melts, it drains. Right. There you go. So, I don't know. Y'all brought me here to talk about air conditioning. I'm talking about apocalypse. Sorry for that.
I love
it. Whatever you can share. I mean, I think that's awesome. Erin, thank you so much for taking time out of your day to be here with us and sharing those tips. I know you have a lot of clients to see in these important
Indeed, I do.
So I appreciate you for coming here to our live stream. Guys, if you ever need to contact Erin, I did post his number on here. It's 512-994-5545. I will also link it in the YouTube description in case you ever want to go back to this video and find his information. It will be on there if you want to contact him. But other than that, Erin, thank you.
My pleasure. I'm going to say, though, that phone number is the best and most immediate way to get in touch with me. A lot of people go into my direct messages on social media. If we're not friends on Facebook, I don't see the notification. So it could be a week later that I see it. So that phone number, if you need me, that's the best way to get it. Call or text. You'll have a good day. Thank you.
Facebook.
Thank you. Thanks for being such a great resource, Erin.
Y'all take care. Bye.
Thank you. Bye.
That was awesome.
All right. So, and that was awesome for Erin to share that with us. I am so thankful for him, and especially that he lives here in the neighborhood. But to move on forward, I do have Mike Brown and Danette Castaneda. They are with Bank Encore or Encore Bank. I'm so sorry, my dyslexia. But Danette, if you want to go ahead and introduce yourself, tell us a little bit about yourself. That way people know who we're talking to. So.
Thank you so much for the audience today. I'm Danette Castaneda with Encore Bank. I was born and raised in South Texas and have lived here in Austin for over 20 years. I've actually lived here longer than I lived back home, but those are my roots, and that's what that built me. So I always like to pay homage to that. I've been in banking for about 15 years. I did a lot in the retail space and also the business banking space. In this role, I'm more of a community outreach person, where I'm really going out in the community and bringing the bank to our neighbors.
Right.
And this is really my first time in the mortgage business. So I'm learning and I'm building out my network, which is why I'm so excited to meet all of you guys, especially because we're neighbors.
Right. And what better way to do it here with the community? We all love each other. We support each other. So
Exactly.
yeah, it's great.
Yeah. And I'm really the connector between my mortgage lender and real estate agents. So I thought it would be a perfect opportunity to bring Mike, who is our commercial lender, into the conversation, because he's really the subject matter expert. I'm just going out looking for opportunities for us to educate the community on the home buying process, and also other events for us to plug and play and let the community know the work that we're doing. So I will turn it over to Mike.
Okay.
Take it from here.
Our special guest, Mike Brown. Go ahead.
Thanks, Danette. My name again is Mike Brown, and with Encore Bank, I run our residential mortgage and construction group here in Austin. Originally from, don't hate me, Northern California.
Oh my God, if my husband were here, he'd be like, California. No.
Yeah. But I lived in Dallas for about 14 years, and I'm recently new to Austin. So I've been here about 4.5 months so far, and I love it.
How are you liking it?
I love it. I
You love it?
I should have moved many years ago.
I should have moved 10, 15 years ago.
Yeah.
Y'all, once I found Austin, I felt the same way. I was like, what have I been doing in Dallas all these years, all this time?
There's a lot of inventory in Easton Park, Mike. So
I was just
going to say.
Mike become an Estonian.
I know,
That's
right?
Yes.
Well, I'd like to kind of speak to y'all about kind of the mortgage industry, the interest rates, and what we're seeing kind of on the horizon.
Oh my goodness. Please talk to us about that, because it's kind of going, here's my thing is, so interest rates is one thing, but man, people are now like, what do you think interest rates are going to be? And I see people posting 9-11%.
Yep.
Oh, it's going to come down. The thing is, we don't know. And now we do our best to try to not forecast, but we do our best to see where it could potentially go, but we don't have a crystal ball. We don't know what's really going to happen, but you are the expert in the field, Mike, and you are in it. You are in there doing these home loans. You're helping people. So I'm hoping you can share with us what's really going on, what's happening, and what you're seeing.
Absolutely. So obviously the rise in interest rates is being put into place to curb inflation. Right. And until we or the Fed starts to see inflation drop to normal levels, then they're going to continue to rise interest rates. And so we do anticipate another hike from the Fed. And usually mortgage rates are long-term interest rates. So the Fed it's a short-term rate, that the banking rate that they control. It does have lingering effects to mortgage rates. That's why you do see the rates going up on the mortgage side as well. Right. But it's not an immediate. And many times the mortgage rates anticipate the increase that the Fed is going to do, and so they raise rates prior to that happening.
Gotcha.
So I have a question about that, if you don't mind me asking real quick, because I've heard from a few different sources that they're saying, because there's a lot of doom and gloom, and some people have been saying, oh, it's going to keep going up. And then I've heard other people saying that, well, a lot of the mortgage lenders have already taken these pre-announced hikes into consideration. Yeah. So we might already be close to the peak. Do you think there's any truth to that?
I think there's a lot of truth to that. Like I said, most mortgage lenders do anticipate the increases before they happen. And so, I don't see any immediate increases that Encore Bank is going to put onto our loans. Again, we have our portfolio products, so we lend our own paper. We are a bank. We like a regular bank as well, not just a mortgage lender. And so we have a lot of other services that we kind of provide, and we're more of a relationship bank in that sense. But we also have other lenders that we work through. They're called correspondent lines. And so we have about 15 other lenders that we underwrite for. It's called delegated. So we're delegated to underwrite for them. And then we sell the loan off at the end. And those different companies, it's like Citibank or US Bank. There's many of them. Those companies kind of reprice almost every day or every couple of days. They change rates, so they're really fluctuating up and down. And so and as far as our bank goes, we don't do that. Typically, we kind of hold true for a couple of months. Also, just to give you an idea of where rates are, as far as Fannie and Freddie Mae, they always report where the average interest rates are. Right now, it's a 6.95, which is fairly high. It's over doubled than a couple of years ago.
Wow.
And so
compared to the last few years, that's a painful number to look at.
Yeah. So the great thing is there's some other products out there. Encore has some phenomenal mortgage programs, and I just locked in somebody at a 5.5 30-year fix.
Is that with the 2-1 buy down or
no? No, it's not with the 2-1 buy down. And so,
wow, that's really good.
Yeah, it's really good. Now there is a discount point, and one thing that you always have to look at with interest rates are what you're buying it down for, because right now the majority of loans have some type of origination or a discount point added on. So the lenders are looking to basically profit up front on the rate and the fees versus waiting to receive their profit 10 15 years from now as that mortgage kind of progresses through its term. So
Mike, on that note, what you said about the interest rates. So I think for clarification, so there's this, people are thinking that right now the going interest rates, like you just mentioned, 6.95 on average, others are getting 7.125, whatever the case may be. It's around the high sixes, low sevens. Yeah. But in reality, what you just said earlier, that you just locked someone in at 5.5, what are people really locking in their interest rates at on average? And the reason I ask this is because it's now a trend that sellers or home builders are providing incentives, closing costs to buy down
points for the buyer. Yeah.
Right. So what is the average that people are locking in at?
Yeah, I mean, that's a great question. It does depend on that discount buy down. Mm-hmm. So if you are in the way that mortgage rates are, there's par, which means that there is no points at all. There's no origination or no buy down on the actual loan. It's just you get your interest rate. Call it a 6%. So 6% is zero fees on a buy down. Mm-hmm. Now, if you wanted to buy that down and you wanted to say, I'm going to add a point, 1 percentage point of buy down, and I'm going to get it to a 5.75 fixed rate, then that's where you kind of toggle between your rate and your fees. If you wanted to add 2 percentage points buy down, then you might be able to get to a 5.5% rate. So it just depends on everybody qualifies differently. There's some real basic parameters and ratios that we look at for qualifying and interest rates. One is the loan to value. How much, and if you're purchasing, what's your down payment? How much are you putting down? Because the more you put down, typically the better rate you're going to receive. Okay. And there's one other thing that when you do say you go above 80% loan to value, where depending on the amount that you're borrowing compared to what the appraised value of the home is, if you go above 80%, you typically will have private mortgage insurance, which is an added cost into the loan. With Encore, we don't have PMI, which is great. So I just locked in a 90% loan to value purchase. I think it was a 5.75, and there's no PMI on it.
Wow.
On some loan products, or is this just conventional? I mean, tell me more.
These are our in-house portfolio loans. Okay. We are undercutting the market by over a point, probably 1.25 to 1.5 on interest rate and fees right now.
That's impressive.
Hold on a second, Mike. Give me a minute. I need to put a little banner on there. All right. Repeat that one more time. So no PMI. And what were you saying? The last part?
That we're undercutting the market as far as other lenders by at least a percentage point, a full percentage point.
And
that's huge.
and our fee structure is much cheaper as well. So,
and that's for the life of the loan?
For the life of the loan. Yeah. So we have a couple of really great products. Sometimes they're specific to industry. So we have a medical professionals program. We have another professional program where if you're an engineer or any type of specific technical trade that you have a degree for or a certification for, then
do y'all have one for attorneys?
What's that?
Do y'all have one for attorneys?
Yes, we do. That's the professional. Yep.
So absolutely. Do I have, I'm going to add the banner on there. Do I have this right, Mike? No PMI and at least a full % less interest versus other lenders?
Yeah.
Do I have that right? Shit.
Yeah.
That's amazing.
I don't know if we're going to be talking, Mike.
Mike, keep talking. No.
Mike, I want you to add a little note about what the loan to value is on the medical professional program.
Yeah, so we can do a 97% loan to value on a purchase with no PMI, and our rates are going to probably be in the high 5s to low 6s.
What?
Great.
Yeah.
How? That is crazy. That is so awesome. You keep shocking me every time. I don't have enough room to add these banners on here.
And we can do that also with other industries, not just with the medical professional program, but our first mortgage cash out program is really great. It's a 30-year fixed. I just locked somebody in. I think it was in the upper 5s for that, for a cash out refi. Mm-hmm. And also we have just a streamlined refinance program that is a 10-year balloon. So some of our programs are actually 10-year balloons or 7-year balloons.
Okay.
Where they would actually have to refinance, or if they sell, but get out of that loan.
Great for somebody who doesn't plan to keep for a whole 10 years.
Yeah. Right. And you know what? Honestly, rates are going to go back down eventually, and they're going to want to refinance anyway.
What's that phrase, date the rate, marry the house?
Yeah.
Yep.
Yeah.
That is crazy. I always say, like I was telling the ladies a couple of days ago, I always tell people that I know it's scary with the interest rates, but I always say if you can afford it, right? Despite the interest rates, despite the prices, and there are homes out there for you. Why not, right? Why not try? And we could potentially have the sellers pay seller concessions to either buy down the interest or maybe help with closing costs if you're short on the down payment. And then just with the programs that you just mentioned, Mike, not every lender, this is amazing that every lender has different programs. A lot of people are under the impression that it's going to be 3% minimum or 3.5 if you go FHA or 5% on a conventional at 7% interest rate. Everybody is under that impression. That's what they're expecting without talking to a professional like yourself, Mike, right? And finding out what there really is out there. It's actually less, right? And no PMI helps. I mean, all these programs. And I mean, it's a matter of starting that conversation, asking and not assuming. I always tell people that don't ever assume you can't. At least try and see what we can work with, right? So this is amazing.
This is a huge opportunity, and especially with the way that prices have been going down, between that and the rates actually being lower than what we hear about it being in the media, there's a lot of opportunity right now. So it's what Liza was saying, where it's like, if there's somewhere else you want to be, if there's a certain thing that's going to improve your quality of life, now is the time to look into that, to pinpoint what it is, and, line things up so that if it comes up, then you can take that opportunity and you're not kicking yourself and being like, oh, if I had just been ready at this time. And then if it doesn't work out, at least you know that you had the chance, you did the best you could, and you're living your best life. But I feel like this is such an important time for us all to be really educated and keeping all our people up to date on what we're seeing, the reality versus the doom and gloom that I think we're all getting used to seeing on Facebook.
Exactly. Because let me share a little bit about what there are a lot more active homes and just as many pending homes in Easton Park than there have been in the past month and a half closed sales, right? So for example, if we go on the resale side, We have currently, let me go back over here. There are 10 homes that are on the resale homes that are currently active. They're averaging about 68 days on the market. Mike, you tell me, but what if, right? A buyer could get that home, possibly negotiate, right? After 68 days on the market, I'm sure the seller would probably be willing, like, hey, at least bring me in a good offer. I might even be able to provide seller concessions, right? I mean, if they pair that with seller concessions with your already badass program, that's a good deal. And if you compare that to how it was last year and in the beginning of this year, the beginning of this quarter was still crazy. At least for me, it was. It was still crazy. And then all of a sudden in the spring, when they mentioned in April that the interest rates were going to increase, that's when it started slowing down. And for me, it felt like it went into a halt in the summer, right? I had people that were so eager to buy. All of a sudden, they're like, no, I'm going to wait. I'm going to wait a year. I'm going to lease. No, actually, I'm not going to do this anymore. So, I mean, I think right now, yeah, we did title this Winter is Coming, but I think winter is an opportunity, a winter of opportunity for buyers, because this is when buyers have leverage, especially with what you mentioned, Mike, what you can provide as far as what programs you have. Combine that with what sellers are willing to hopefully negotiate, something reasonable, and buyers get in, sellers are happy. So
buyers have more options to choose from than they've had literally in decades. Like, there hasn't been an opportunity to see the kind of inventory we're seeing right now in so long. Yeah. And you combine that with the kind of rates and programs you're talking about,
And I just verified this today that we do not have a maximum seller credit. So.
Wow. What? That was the next question.
Wait, hold on. Oh my gosh, Mike. Full of surprise
viewers. Do y'all know how crazy that is?
I know that. So wait a minute. I typically hear 6%. How are y'all able to pull this off? No max on seller concessions?
No max on seller concessions.
Easy.
You're like a superhero right now, Mike.
What are y'all doing up in there?
We're one of the fastest growing banks in the country. So we are just trying to do right by our clients, and I think it's something that we look very closely at, and we look at what other lenders are doing, and we have our own underwriting department, and again, we hold the paper and we hold the loans for the life of the loan. So
what do you mind if I share your phone number online?
Absolutely.
What I'm going to do it right now, I'll create a banner. What's your phone number? A number that you are okay? In the world of YouTube, it stays on forever, Mike. I'm not going to delete this video. So give me a phone number that you're okay me sharing.
I only have one phone number.
Okay, me too.
That's the number. I emailed you. It's right there. If you, I can just give it to you right now.
Yeah.
You want it's 214-289-5992.
289-5992.
Yep.
So 214-289-5992.
That's it.
All right. Let's see. There you go, guys.
And then I'm going to throw out another question. Whenever somebody's ready to get the ball rolling with Encore Bank, where's the first step that they take? Is it on your website? Is it messaging you or calling you? How do you like people to start?
It's definitely messaging or calling me. We have a great application process. It's typically just through our app. So we've got a lot of great technology that we offer our clients. They just download the app, or they get on a laptop or a computer and log in. And they just go through a five-step process, submit their application. It goes right to my system in real time. And I can typically get back a pre-qualification letter for a purchase within, I would say a couple hours. So if you are looking to buy, I can do that for you, get it done really quickly. And again, it's free.
You don't mind me asking. Oh, sorry. I was going to say, do y'all ever do the underwriting kind of early on for the more complex situations where somebody might have a home that they're going to rent out and they're also trying to figure out what their budget would be? Do you ever send that directly through underwriting?
We do. Yeah, I have underwriting look at a lot of different types of income. We have a lot of kind of complicated type of income that we see with many different businesses and carryover losses and things that can affect how you qualify. But yeah, absolutely. Anytime we have a question, that's the great thing. We can send it through our underwriting department, have them look at it, get some initial approvals on things before kind of going down a rabbit hole with someone and making them provide a lot more information.
What is your minimum credit score looking like? Are we at 640, 620? What is the minimum? I feel like that's a question.
Yeah, it's typically 640 depending on the program. But I know that we do have some that go down to 620. They're limited though as far as what programs and what we'd be able to offer. But 640 would be the minimum for us.
Okay, great.
Mike,
now, again, that's typically with other programs as well. We just don't lend Encore's money. We also, again, have those correspondent lines. And so there might be some other lenders out there that we can look to qualify you for, or the borrower
that you
for.
Still have access to.
Absolutely, yeah.
Mike, can you just touch on what you're using to verify income for applicants? Because I know that's something that we also do a little differently than our competitors. So
typically you look at a 2-year history of income. In many cases, you'll be required to provide your 1040 personal tax returns. And then if there are business returns, we'll typically need to see those too. In most cases, we'll just need 1 year of income, and we won't have to average them out. So if you have because of COVID, maybe you had a lot better year in 2021 than you did in 2020, we can look to qualify you based on that income. In some scenarios, of course, we still do have to qualify you traditionally, and we need to see that type of income, that type of documentation, W-2s, pay stubs, 1040 tax returns, things like that. But we also have bank statement loans. So we have business bank statement and personal bank statement loans that we have through some of our correspondent lines. And those are great programs. The rates are not as low as what we would offer on a traditional qualifier, but they're still pretty competitive. They're probably in the mid 7s to low 7s. In many cases, self-employed people deduct much of their income, on their taxes, which makes sense. Everyone would do that, pay less taxes, but it makes it harder for them to qualify. So we do have some of those bank statement loans that can help with that.
Ooh, and another little question. Do y'all consider life insurance policies as additional assets whenever doing qualifications?
I don't think we would consider as actual liquid assets. It could be supportive, where if there was a question of whether their reserves or their assets are not quite meeting the guideline requirements, then we can look for an exception on those for sure.
Okay, cool.
Awesome.
Great information.
Yeah, that's great information. I'm really excited. I'm gonna look you up a bit more and find out. No.
We're going to be calling you up again later. Like, hey, we need to talk about that program again.
I love talking to people about what we can offer. And I can do it pretty quickly. I've been in the business for a long time. I've been in commercial real estate a long time as well. So also, if you are looking to build and you wanted to buy a lot or look to do a one-time close where you buy the lot, you do the construction financing, and then it rolls into a permanent financing at the end. We have those products as well. And so, yeah, I'm happy to walk you through that process if that's something that you're interested in as well.
I really want to throw out there for our people who are, not super secure in real estate, or maybe this is the first time that they're going to be looking to buy maybe a second home, whatever it could be. Having a lender that knows how to get creative, like you're saying, you're able to do, makes all the difference.
Sure does.
And Liza, I don't know if you had the same experience, but even though everything was tapering off at a certain point after spring, all the buyers that I was getting in were the ones that were working with multiple lenders and finding people like you and saying, oh, wait, here's the opportunity, because it really is, the opportunity is only an opportunity if you're working with the right product, right?
Exactly.
So I see what you do as being kind of a matchmaker for my people. And I'm always really, really excited when I find people that are able to be flexible, like it sounds like you guys are at Encore Bank. So we'll
absolutely. Yeah, I don't like to hear the word no. So if I'm fighting for one of my clients, I am going to battle, and I will make it happen.
That's how we see it too.
Yeah, and that's absolutely what we need, especially here in the neighborhood where we have had some of our neighbors express concern, like, hey, what's happening here in the market? Because it was going up, and then it stalled until it started going down, right? The prices weren't climbing up anymore. If not, they were going down. And they may still continue to go a little bit down the longer they stay on the market, unless these buyers, how do I put it? Unless the sellers are savvy and they know what's going on, and there's programs like yourself, right? They can say, well, if the buyer is wanting to reduce this price, or they're wanting this in concessions because they're trying to get a lower interest rate, well, I know Mike Brown can get them already without these seller concessions, right? So it works both ways, right? If there's power to that knowledge. So,
and I want to add to that. I want to add to that based on some other stuff I've heard, which is essentially there is going to be a time where the prices are still going down because of what everybody sees the interest rates as being, but the interest rates actually also start going down. Yeah. That is the moment of opportunity that I'm saying I would hope everybody who wants to make a move would be ready for. That would be my goal with everyone. Because there will be a time, and we're not going to know we're at the bottom until we're past the bottom. But
I would also add, for our clients that are still on the fence, let's encourage them to find out what they don't know. One of the biggest things, I want to wait. Well, we don't know what we don't know. So you have to start with talking to a lender. You got to figure it out. There's so many misconceptions. I mean, we talked about the down payments and stuff. I still have people that say, oh, I have to put 28% down. Like, no, you don't have to. Yeah. And now we know Encore, and the reason, I mean, they have some education. They know if I put 20% down, I don't have the PMI. Well, now we have other areas and opportunities where you could still get rid of that PMI and not have to put that 20% down. So that's super, super huge for a lot of our buyers that are just scared. That's what it is. It's fear. People are just scared. And
one thing I wanted to mention too is that we have a great bridge and HELOC program. So the bridge loan is basically transferring equity from your current home into the new home. And so in some cases, homes are taking a little bit longer to sell right now. As long as you are planning to sell your home, if you have it listed, we can do a bridge loan, which is basically just it's almost a home equity, but it's an installment, just a loan, and it transfers that equity into the purchase. And so you can buy the purchase and not lose out on that purchase as you're selling your house.
Wow.
And how much is the cost for that service?
It's minimal. I think we charge maybe like 0.5 point for the origination. There's a couple processing fees. And the interest rate is an interest-only payment. And right now it's at 6.95.
Okay.
And that's it's a 2-year loan. So
for 2 years, interest only, right? For 2 years, which would, I mean, not that you need that long to sell, but yeah, exactly. hopefully
it's supposed to be a short-term loan that will probably, you should only be in it for a couple of months.
Exactly. For a few months. And that's reasonable. As long as it makes sense, right? I mean, the numbers have to make sense for that to happen. And it might be helpful to some of the people here in the neighborhood, because there's many reasons I think they would want to do that. Besides, either I know of some that have lived, they're OGs and they lived in certain neighborhoods and they want to move up, have a bigger house, and they move into one of the newer sections of Easton Park. So there's a lot of move up buyers here within just our community alone. So that might be helpful to them if they have concerns or express concerns that the house that they have to sell might take a little bit longer than they initially anticipated. So that's a good program for them to consider, unless the other person is willing to hold out a long contingency before the house sells. So
I will say another thing that I want to touch on, Araceli, you said that a lot of people don't know what they don't know. And I feel like that is the number one thing I want all of the people in Easton Park to feel encouraged to come to us, because one of the first things you're going to want to know is, how much can you rent your house for? How much can you sell your house for? Because if you can rent that house out and buy another one, there's no reason for you to sell it. You know what I mean?
Mm-hmm. Right. So education is so important. And that's what I love about my role, is because I'm really more of an educator than a banker at this point. And it's about making sure that the community is ready to buy when that opportunity presents itself.
Yeah.
And Mike is phenomenal about being available and sharing his expertise. So as I'm hearing all of us conversation, like I would love to host a seminar, like a home buyers class just for Easton Park.
Let's do it.
That would be
And then
wonderful.
just educate the community on different topics, because
Different ways
it
to
all
get
starts
creative.
with
Yeah.
being knowledgeable and then being ready to, pull the trigger, because, let's say that you're at a 600 and then the market drops next year. Well, if you haven't prepared, you're not going to be ready for that opportunity. So
Right.
let's get in front of that and set you up for success. So that's what I love so much about my role, is that I can kind of take those clients off and those initiatives off of Mike's plate so that he's available to meet one-on-one with clients and get more opportunities across the finish line.
I love that. It really makes such a huge difference. And I know that we all use that as a part of our systems as realtors, where part of our job is to help people figure out, what are your boundaries? What are your limits? Where is it that we consider it an opportunity, and where is it no longer an opportunity? You want to figure that out before you're looking at a specific house, right?
Exactly.
So I love that idea. We should definitely do that.
And then it makes it easier for the lender, right? Because you already know what documents you need to collect, and you're not scrambling. So it just makes it a much seamless process for everybody.
I have another question, and this is kind of a personal question, not like personal, but no. Okay, so let's talk about buying a second home. I'll just use myself for an example because I am looking to upgrade. I do plan on keeping my condo in Easton Park. What does that look like for me? Because I know that once I have a lease in place, then that does become part of my income. Does that lease in place need to be for 1 month, 3 months, 6 months? What does that look like? And then also too, let's just say I'm going to stay in my house and then I want to buy an investment property. What are those interest rates and down payments looking like? Two separate questions, but kind of along the same.
And then you'll probably want to know if you have to have the lease in place before you close on the house, or if you've got 60 days to close something, if you're able to use the market rate that you would anticipate to get qualified, or if you have to have the lease, right?
Right.
Those are all important to know.
Yeah, I can answer most of those, and I've dealt with this a lot, and things have changed with the industry over the last many years, and most lenders require that they see the income on your tax returns in order to use it for qualifying.
Yep.
So it's not 1 or 2 or 3 or 6 months, it's a year, and then also claiming it on your taxes.
Mm-hmm.
Okay.
Without that information and it being documented, then most lenders, for the vast majority of lenders, will not include it in the qualifying. So that is something that if you were going to do that, most likely, because if you're going to purchase a new home and rent your old home, because you haven't had that track record yet or seasoned rental income, then most likely you'll have to qualify using both of those payments in your debt to income ratio.
And there's no way to take the market value, because I think that's what we did with our house in Easton Park. So
depending on the appraisal, in many cases, if it's an investment property, we can look at the appraisal for that income. So if we make sure that we verify the rental income from an appraiser and it's on an appraisal, then we can use that. But there are just some certain things that we would probably need to go and make sure that
the individual is prepared for.
Yeah, exactly. Yeah. And if we see maybe some copies of clear checks, we can use those. But it's not very common that we're going to be able to use the rental income unless we see that there's a track record on the tax returns.
Gotcha. Okay. Good stuff.
Yeah, awesome. Well, I know you guys are busy and helping other people. I really do appreciate you, Mike and Danette, to come to our live stream and educate our community about the awesome programs that you have. So, and for the community out there, we're not leaving yet, but I am going to let go of Mike and Danette. They have been very helpful, and they blew me away. I'm sure they blew, right, Araceli and Gabby? Those are awesome programs. I'm definitely going to hit you up because I like hearing 5% interest rates. I like hearing no PMI.
That is a tool.
Market on the all of that. Like he went bam, 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 and bam. So I love what I'm hearing. Again, guys, if you need Mike or Danette's information, I did pin here Mike Brown's information with Encore Bank. It's 214-289-5992. You can text him. You can call him at midnight, call him at 1 a.m. I'm joking.
He's going to Mexico tonight, so don't call him.
Only number. So yeah, please call him at reasonable hours to get this information. But other than that, guys, Mike and Danette, thank you so much for joining our live stream. You guys are free to go. Yeah, thank you.
Awesome. Thank you guys so much. We'll be in touch.
Bye, guys.
Bye.
Bye.
That was awesome.
That was awesome. So, and I know I love hearing everything about that. So I'm going to definitely, after this live stream, guys, I'm going to pin his information, Danette and Mike's information into this YouTube video. That way you guys can always go back, press the link, and you will see everybody's information. If you recall, it was Aaron with Firefly Comfort Systems. And then we had Mike Brown and Danette Castaneda with Encore Bank. Now to move on to the Easton Park updates, the market updates. So I don't know. Let me see. I have here.
Did you want to share what you have?
Yeah, I can definitely share. I will go with, let's see here. I will go with leases because I think maybe some folks might want to know about the leases. And I'll jump into what's currently active. And then maybe, and only for resale homes, guys. And the reason we're doing this, we're splitting this into resale homes and new home construction numbers. We're gonna split that and talk about that because they're very different. New home builds are typically on the market a lot longer because they're still under construction. So that does tend to skew the numbers a bit. So we're going to go into resale first, and then we're going to jump into the new construction. So, but before we do that, I'm going to talk about leases because I know some people here are interested in hearing what the leasing space is looking like in Easton Park. So right now, as of right now, and I did these comps maybe like a couple of hours ago. So all the leases in Easton Park, we have 6 that are currently active. And they range anywhere between $2,495 to $4,100 on the active leases. Currently pending, we have 2 pending leases that have averaged 32 days on the market, and they range anywhere between $3,000 to $3,325 in leases. And the currently closed leases, there were 9 leases that have closed in the past 90 days. They did average 22 days on the market. And it was a minimum of $1,200, and I'll explain why in a minute, why we have such a minimum value there on that one. $1,200, and then the max was $3,000. The reason we have $1,200 here is if the people that are new in the community or they're not aware, we do have a lot of houses that have an ADU, and those ADUs do rent out, and they potentially make good income for those that are renting, or maybe they have it for family, or they do have a short-term rental, which HOA does allow. I think I want to say 5 times a year, but we do have those numbers incorporated in here as well. So that's why you are hearing me say $1,200. So which is crazy because $1,200 was pretty good income, right? It'll offset that mortgage if that's what you're looking for.
So I just want to throw in there for a little bit more context. The 1251 was 409 square feet, and the one that was for 3,000, that was for 2,300. Am I reading that right? Yeah, 2,325 square feet. Yeah. So just to put it into context in the grand scheme of things, because I know there's
absolutely, yeah, we have a minimum of 409 square feet, and then the max was 2,325, and which is about, I want to say, I think the average home in Easton Park is about 2,100 square feet. Yeah. So that sounds about right. And it looks like the average dollar per square foot is $1.68 average. Now it doesn't mean that's exactly what you're getting. I'm just saying an average when we consider the smaller ones and the bigger ones, that's what it's averaging out. Does somebody want to take on what active houses for resale we have right now on the market. If not,
I'm going to talk about our new build situation.
Got it. Let me go into the actives then. Just hang tight for just a second. Okay, so right now for the resale homes, we currently have 10 active resale homes in Easton Park. They are averaging about, because there are some in there that have been on the market for quite a while. So the average comes out to 68 days so far that they've been on the market. I'm going to now jump into pending resale.
I just want to note that we are seeing the homes on the market a lot longer. The longest one being 189 days. So that is a long time. That's 6 months, but that's what's happening in our market right now. So I do want to point that out, that we have some that have been on the market for days.
And not all of them. Like if I quickly broke down, like as far as the ones that are active right now, and again, this is all average, like the minimum amount of days that a home has been on the market right now, as far as a sale goes on the resale side, it's 14 days. And the maximum one that I'm seeing, I know you said 189, that's probably that 2021 build. I took those out because they were still fairly new. So I have 131 days for the maximum amount here.
Okay.
Yeah. So I think 2021. Yeah. I think it was on, it was either, yeah, it's weird because technically that should be resale because it's last year, but I was like, wait a minute, they're still trying to sell last year's home that were already built. But yeah, as far as the active goes right now, the newest home we have on the market is 14 days old. To put it in perspective, on average, we're seeing 68 days on the market, with the longest home on there at 131 days. And this is a home that was built. It's in Knobway, that's Nob Hill. That's 2450 in square footage. They have it listed at 737,000. Built in 2017. It's a 4-bedroom, 3-bath. So just to put in perspective what's happening out in the market. I don't know if someone else wants to take over what's pending, what's currently active under contract or pending.
Y'all are welcome to. I just want to throw something out in there for a little bit more context.
Yeah, go ahead.
Because this is something that changed this morning.
Let's talk about it.
But what we notice whenever we look at a lot of these patterns is that there is a slowdown, particularly at two ends of the spectrum. One is at the very high end and one is at the low end. And so a lot of lenders have been saying, having spoken to a few different ones and trying to get a lot of theories, what I've heard over and over is the people at the high end of the spectrum, they tend to have quite a few assets in stocks, and stocks have been down for quite a while.
Yes. So oh my goodness. Thank you for bringing that up.
Yes.
So the people in that mid-range are generally the ones that they don't have too much tied up in stock that it's keeping them from buying. And they're able to be a little bit more flexible with a potentially higher interest rate for a little while before they refinance.
Right.
And then obviously if you're on the lower end of the budget, it's way freaking harder. So you have to be more careful with what risks you're going to take, right?
Exactly.
So I think that's super interesting to consider, especially seeing the spike that we just got this morning. I don't know if y'all saw it, but there's some interesting stuff going on in the stock market. So I would anticipate that when it starts, getting a little better, we're going to see sales going through more in that upper end of the pricing spectrum.
Absolutely. And thank you, Gabby, for bringing that up, because these outside factors do directly or indirectly affect the real estate economy as well. So, for example, back in 2020 during the pandemic, I've had a few clients that had a lot of their funds tied to the stock market. And when everything went dipping down, they had to pull out of being under contract because they just couldn't. They were okay losing their earnest money deposits, right? Rather than committing because of that fear of the unknown. There were so many unknowns that year. It scared a lot of people. So yes, this is definitely tied. And when the stock market goes down, people freak out, right? They're like, what's going on? Same with
you're not going to want to lock in your losses when the stock market's down. So it's like, no, you're going to wait until it comes back up again before you pull it out, lock in whether it's a loss or a gain. and then put that towards an investment, right?
Exactly.
So,
and the same happening, just as the stock market, same's happening in the crypto market. I know a lot of people aren't into crypto, but I'm a huge fan of crypto, but it's currently down, down, down. It is so low. It breaks my heart.
I thought about you when I saw that this morning.
Believe it or not, a lot of people have their money tied to that. They
do.
do have their money tied to cryptocurrencies and they're relying on that, right? So this all matters, right? As far as when it comes to making a big decision, purchasing a big asset. So these outside factors do also play into what's going on right now. Besides the interest rates, besides inflation and interest rates trying to combat inflation, what's going on in the market, the season we're in, like all of this is coming.
It all slows things down, but at some point, these factors are going to start lightening up, and there is going to be a window of opportunity there.
Exactly. So thank you for bringing that up, Gabby. That's a very, very good point.
My pleasure. And then what were you saying about the pending?
Yeah, we talked about the active resale homes in Easton Park. I do want to also go into if anybody has it up, if y'all don't, you have it already.
I see three right now, but I mean, there are two on Skyline, which are the model homes. So I'm not sure if I'm missing what you're seeing.
Let me see. I'm gonna go into my pending. 1 second here.
Sorry.
Do you want to pull up the pending? Yeah, I see five pending homes, resale homes in Easton Park. Do y'all see that?
Where is it? My MLS is being real slow right now to pull up.
Yeah, no worries. I have it right here. I'll go ahead and discuss what I'm currently seeing. So on the resale side, right, guys, in Easton Park only for resale homes, we have 5 homes that are currently pending. These 5 homes, on average, they have been on the market for 24 days on average. We have a minimum price point of $639,400 with a max price point of $785,000, the average being $712,200. And these are pending homes. Again, pending means we don't actually know what they're going to close for, what it's actually under contract for. But it does give you an idea of what's happening in the market, how long it took before it did go under contract, and what those price ranges are as of now for pending. I think more importantly, people are wanting to know what has currently closed, because those are the numbers that really matter. Before I jump into that, let's see. On the active under contract, now in our MLS, we have 2 statuses. We have pending and active under contract. Active under contract could mean many things. It could mean option period. It could mean a contingency of the buyer needing to sell their home before they buy the current one that they're under contract on. It could mean a variety of things. So we do have 2 separate pending or active under contract statuses. For the active under contract homes, there's 3 of them. And those are averaging about 37 days on the market. And we have the minimum price point on the active under contract homes at $375,000 with the max at $585,000. So overall, let's see here.
And how many days was that $375,000 one on the market?
21 days.
21 days. It's a 2-bedroom, 2-bath. It was 21 days on the market. Again, we don't know what it's under contract for, but they did list it at $375,000. So more than likely, it probably went either for that or just a tad bit below, or maybe it could have been above. Who knows, right? Just because we're not seeing or we're not hearing of multiple offer situations.
They're still happening.
They're still happening, guys. Yeah, we're not seeing it. Here's the thing with social media and news. You see a lot and you have this perception that that's what's happening a lot. But I'm telling you now, I'm still seeing on some homes, they get multiple offers. And
even after a week or 2 on the market, right? Have y'all seen that?
Yes. Because those buyers are, it's weird. You never know, right? One buyer walks in a week or so later, right? And another buyer could at that same time, right? It's all about timing, and it could put the home into a multiple offer situation. It is not uncommon for a home to go multiple offers even after a month. I'm telling you, it's weird how things happen. So don't go off that perception that Again, no, it's not doom and gloom. Market's crashing. Oh my gosh, my house is not going to be able to sell. No, you just never know. If you do the right marketing, you stage it well, your pictures are well, the curb appeal,
you price it well, all of these things.
We educate, right, the other end as well, because we don't know if the other buyer is savvy on what's being offered, right? Just like what Mike Brown had to say about these interest rates, these programs that he has. If we can just let the buyer know, hey, this is what's going on. You could lock in this house at this price. This is the interest rate. You never know.
I want to throw out there, what this means is, even if you as an individual are not looking for your house, if you know that you've had a friend that has been complaining, they can't get a house, whatever it is, this is the time to reach out to them and give them a little glimmer of hope and say, hey, you might have an opportunity here. Now is the time to go reach out to somebody, reach out to a realtor, a lender, whoever you trust. And obviously y'all are welcome to send them our way. But at the end of the day, get them in touch with somebody who can guide them through this, because now is when they're going to need that. And it can be really tough whenever you're already in that mindset of, oh man, I missed my chance, to say, hey, I'm going to get back into it. So if you've got friends that you know this is something they would want to do, that they want to buy, now is the time to encourage them to get on their stuff. So
you just never know.
Never know.
To piggyback on what Liza was saying about, it might be on there for 30 days. I always tell my buyers, if you like it, and it's like Murphy's Law, if that's the term, like once one person likes it, then there's another person just out of nowhere. Like, where were you a month ago? Well, you know what? The universe was like, go look at this house. And they said it to multiple people. So it does happen. And they're just staying on the market longer, and that is okay. I mean, that's what it was pre-COVID. We are just getting back to a norm.
That used to be considered almost healthy.
Yes, exactly. Yes.
Y'all remember the days before things were on the market for 3 days and then they went,
I know. See, I mean, 60 days was normal.
There was that time, right?
Yeah, there was that time that 60 days was completely normal. So it seems like we're now correcting or normalizing, right? Coming to normal standards. Well,
as we're talking about normal, let's just say that the 2.5, 2 point anything, that was not normal. That was not normal interest rates. No. So it's just crazy because we just got a little bit spoiled.
We did.
We're probably never going to see that again.
Not normal. That is not normal. It was not normal. It was just money being pumped into to not crash our economy. And
which is also why it's not normal that we saw the activity we did, right? The rates of appreciation that we did.
Exactly.
Those were interest rates that were artificially held down. So now that they're not artificially held down, there's going to be some normalizing, but definitely good to not have doom and gloom when at the end of the day, we're still doing better than a lot of communities do in a balanced market. And we're still in a seller's market compared to.
And that's the thing. That's what I tell people, like, especially in the community, right? There is that feel that it's a buyer's market, but technically on paper, we're still a seller's market, right? Buyers
are just not as desperate anymore.
Exactly. So we're kind of coming into a halt, and we're now feeling that kind of that whiplash, like, whoa, until we start settling down. But yeah, we're definitely still in a seller's market. It's just buyers now are able to shop in a seller's market with that advantage of getting some concessions, some incentives, right? What
a relief, because
it is.
I don't know about y'all, I was tired of helping people bid $100K over asking and still not being sure if we were going to get it.
Standing in lines for 30, 45 minutes just to walk into a house. I was
a stinky house. A bunch of people over here waiting to go into the stinky house, and we're all just
rain with their umbrellas, just trying to get into this house because tonight they're going to get an offer. And the days of best and highest by 5 o'clock. I'm like, oh my gosh, I'm really glad that for our buyers we're out of that and moving forward. And
people need to have some a little bit more manageable. Yeah, a little bit more manageable situation for the buyers. It feels a lot better to see less desperation from that side, right? So I know there's been a lot of like doom and gloom, but I have been kind of relieved to see just a little bit of it easing up, normalizing, and I have full faith that over the next year, as the normalization sets in, we're going to see that appreciation pick right back up again. But this is just a healthy part of the cycle that happens to be a really good opportunity in the making, right?
Exactly.
So yeah,
I agree. All right, so moving on to the close. I think this is like the meat for people to know what has closed in Easton Park. Again, guys, the sales that have closed are for all of the month of October and into this month of November to today. So we've had 5 recent closings, and they all range from a minimum of $365,000 to a maximum of $760,000. The average price with all of these into consideration are $564,800 with the average days on market of 21 days. The
average square footage is.
Go ahead.
Oh no, I don't have it. What is the average?
The square footage. The square footage average is 1941, with the minimum being 1,088, and that's going to be the condominium townhomes right here in UPE, and with the maximum being 2,940, and obviously that averaging out at 1941 in square footage.
Awesome.
Yeah. And these are all, like I have here, most of them are in Skyline and Union Park East, the 5 homes that have sold recently last month and into this month here.
Yep.
Now, as far as list price goes, right, we have homes that were listed between, like for the minimum, $375,000. The maximum is $800,000, but the actual sale price is between $365,000 and $760,000. So there was a drop definitely for that home that was trying to sell for $800,000. They actually sold it for $760,000, and that one was on the market for 59 days.
Yeah.
And let's just face it, guys, they still did pretty well.
Fantastic.
Yeah, you know what? There's, out of all of these homes that sold, out of all of the 5 homes that sold, 4 of them sold under asking price and only 1 sold at asking price. There was 0 in the month of October and into this month, right? There was 0 that sold over asking. So I think it's safe to say that we can't expect, it'd be nice, right? And I'm not saying it's not going to happen, but the expectations that you're going to get over asking are probably slim depending on where you priced it at. So all of these homes, they were all under asking, and only 1 at asking price at 100%. So
I think at RA they gave us some stats that it's about 95% of list price is what they're seeing. That's the trend.
That's a good marker to know. Yeah, that you can expect probably 5% under asking price.
Yeah,
on average, right? This is not just Easton Park related, but it is on average. That's what you can probably expect, which is good to know for anybody that's probably needing to sell. This is good data, good information to know. If you guys aren't part of the Easton Park Neighborhood Real Estate News Facebook group, there have been monthly postings from January up until September of what those stats were. Now what we're doing is we're incorporating that data into a live stream because we do want to get neighbors involved into our live streams and live Q&As. If you guys have any questions, concerns, and we did have some neighbors, I think one of them had mentioned they were concerned about why the homes are staying on the market so long, right? Well, this, and as you saw what Mike Brown had mentioned, this is what's happening, right? With the interest rates, we're trying to combat inflation. It's somewhat working. With the houses are still, they're still pretty high, relatively high, but it is working for some buyers, right? All the parameters fit for them. And we're able to still make a move in that market, but it's not horrible. It's just normalizing. It's something that I've seen, at least in my career, I've seen 60-day homes on the market, and that was pretty normal to expect that. So I don't think it's something that we have to worry about or be concerned about. It's just if you set yourself with the expectations up front, right, what to expect, we can look at this price.
Yeah.
At least look, right, what's happened. And normally what appraisers do, they look at the past 180 days. But if we can look in the past 90 days, what has happened, and then even narrow that down in the past 30, 45 days,
Right.
it'll help you make a decision to what to price the home at, right?
Mhm.
And then on top of what marketing package you're going to get, you have your pricing, your marketing package, what lenders are offering, what buyers are doing, then you know what to expect. You're a lot more prepared in this market. If you need to sell in this winter, you're so much more prepared. You have the expectations laid out and minimum on the disappointments, right? Because when you don't know what to expect, all you're going to get is disappointments. Like I'm not getting over asking. I'm not getting the multiple offers that we used to get. So if you're in last year's news, you're going to be very disappointed. So if we can at least educate you what to expect, then at least you know, right? You know where to go in, where to make that decision, where to go in on that price. I don't know if you guys agree with that, but at least that's what I'm seeing.
Yeah, of course. Because I also don't want anybody to feel encouraged to sell based on last year's prices. If they don't make sense at this year's prices, then they shouldn't be putting their home up for sale. You know, that's one of those things where it's just like, as much as I would love to get somebody, you know, 100,000 over their wildest dreams, if they're not going to be happy with what's realistic, then we need to go from there and find a solution to what they're looking for, right?
Right. And everybody has a different reason for selling, right? They're either moving out of the state, they absolutely need to sell, they need to, it could be a variety of reasons, right? Not everybody
program.
Yeah, I'm sorry?
I got to say that bridge program,
yes,
I think is one of those things that if you have any, especially in a market like this one where it's like, the home values are still pretty good. It's just taken a while to move. Mm-hmm. That's something that you might want to count on rather than saying, okay, we're going to try to sell this one and then buy that one. Like, no, you can give yourself peace of mind. You can make it something that works for you and your family, right?
Exactly.
You have to know what all of your options are. So I love that we're doing this.
Yes, I'm so excited. And then to jump in, Araceli, you spoke with Perry Homes in Brookfield, right? What, just so sellers know what people are doing and maybe potentially any buyers, what incentives are they providing?
Okay, so yeah, real quick, we'll just start with Brookfield. So Brookfield does have the urban homes, which is our condos in Union Park East, and now we have Union Village, right, and then they also have the courtyard homes. So right now for the urban homes, they're offering $7,000 in incentives on if you contract before the end of the year. So ideally, they do want it closed by the end of the year. However, things happen is if you contract before the end of the year. So $7,000 for the condos, $10,000 for the courtyards, and then $15,000 for traditional single family homes. So there are also that the variation of single family homes that you see throughout our neighborhood with Brookfield. Now, when I talked to Priscilla at Perry, sorry, I'm pulling up my notes because what she said that Perry is offering is freaking crazy. They are offering $30,000 in-house lending incentives. So the Perry homes are, you know, a little bit on the higher end. The bigger homes, they are amongst the biggest homes in Easton Park, ranging from 2,700 square feet to 3,400 square feet. They do have one right now listed just under 800,000. But again, just crazy incentives that the builders are offering. I mean, they're not doing any pick your lot, build on it quite yet. And they hope to roll that out at the beginning of the year. But right now they have inventory homes that they are ready to sell and they want to give you money to buy them. So
everybody's trying to give money.
The holding cost is going to be higher than giving a discount, right?
Yes. So the model for Perry Home is going to be finished on Saturday. So I encourage you all to go take a look at it. It's beautiful. Perry Homes are always just on point. So I would love to see y'all there at the model home and get to meet you one-on-one.
And I think they just switched out one of their project managers too. So I'm excited to see what kind of growth that comes with.
Ooh, nice. Well, good for Perry Homes. I'm glad that they're providing these 30K seller concessions because that means the world to eat. That's probably, I want to say probably either 0.75% or a full point a full percent off the current interest that they're providing. But again, guys, you either go with, if you're considering a Perry home, you either go with their lender to get these incentives, or you shop around to see if another lender can provide maybe a better program. Like Mike Brown with Encore Bank, that's a pretty good program. I'm just saying, I mean, to pay down, if the going rate right now is about 7%, to pay down to get down to even 6%, you're talking about almost $30,000, probably $28,000 on a Perry home. Just saying, it probably might be even more, and then it depends on the price, right? So.
Right. Absolutely.
You got to compare your options, right? You have to have yourself set up to consider the different lenders and what your life would look like if you were to work with the different ones. And
exactly.
Yeah.
Let's move on to the new homes, because I do want to put into perspective what new homes are out there, the new home inventory that's available to us via our MLS. Yeah. And that way you guys see. Now, earlier we did discuss the resale homes. There was about 10 active, about 5 that were pending, and 5 that have sold, right? So not much activity. But on the new build inventory, you guys be surprised, because it's quite a bit. We have, and I'm going to scroll down because it's a lot of homes that are currently active on the market. I'm showing 65 homes that are currently active in Easton Park. So to put things into perspective, that's how much competition you have, especially when it's a resale home. It really depends, right? What about the end buyer is looking for? But there are 65 active new homes, ranging from the condominiums to the townhomes to the other sections of Easton Park, small and big homes. 65 of them are currently active. Now, out of those 65 homes, these homes have stayed on the market on average for 97 days, right? Going 97 days. And they're still keep adding new ones, right? Because the most recent fresh one has been on the market for 3 days. Now, moving on to what's been under contract or pending, right? We have, this is quite a bit. So that's about, I have here 62 total listings that are currently pending. They were on the market on average for 45 days. And as far as price point is concerned, the minimum pending right now is $380,000, and we have the maximum at $1,066,000. So again, $380,000 minimum, maximum at $1,066,000, and with 45 days on average for it to be on the market. So these are all currently active under contract or pending for new home sales, right? Now, for the new home sales for the month of October and into this month, we've only had two listings that have closed that are new, brand new. They were on the market on average 133 days. And this is the reason why I didn't want to include the new home sales into the resale homes, because that number alone would probably skewed everything on average. These homes, one closed at $589,000. It was originally on the market for $594,000, closed at $589,000. Another home was on the market for $749,990, and it closed at asking price for $749,990. So
I want to go back and talk about, I think you were just saying that there's a pending home that's over $1 million.
Yeah, let's talk about it.
Mind blowing to me. I have lived in Easton Park for 3 to 4 years. In Bryant Park initially, and
me too, girl.
Park started in like high 2s, mid 3s, you know, and the Knob Hill came and it was like mid to upper 3s to low 4s, and now we have homes that are $1 million. So that is the growth.
Isn't that shocking?
So crazy.
Especially,
let's throw out there though, that $1 million home is 3,000 square, 3,500 square feet basically, and it's that 2-story Perry home that they don't release a lot of those. When we bought here, we were looking for a 2-story, and we ended up going with a 1-story because the wait for the 2-story was going to be too long.
Wow!
So that's also something that they just trickle out just a teensy bit at a time.
Yeah.
That's crazy. Yeah, crazy. I think it's fascinating. I remember, you know, when we would, well, personally, when I would look in just our regular Easton Park homeowners forum, all the homeowners, we would see 475, like, oh, no way it's going to get to 500. And it would pass 500. Or like, no way it's going to get to 550. And it would pass 550. And people were like, man, I'm selling my house if it gets to 600. It would pass 600. Yeah. We're like, the people were just so shocked. Everything happened so fast, right? Now, the people that said that they were going to sell if it passes 600, maybe they did, maybe they didn't. Maybe they're still here. But it got like well into the 700s for resale homes, right? So for me, it was crazy too, because I originally lived in Bryant Park like Araceli did. And I just thought it was crazy. Like at the time, you know, I'm thinking, wow, they want sub 300s for this house. This is great. And now, no way you can find that. There's no way. So all the OGs in Easton Park, man, y'all got it good. And all the ones, you know what? I was looking at the Lanai, the Paysetter home Lanai with the casita and the ADU.
Yeah.
I remember at the time, I want to say this was back in 2019 or early 2020. It might have even been 2020. I don't remember. It was 475 with everything. All right. 475. Mm-hmm. The house, you know, the casita, you know, y'all know that's upgrades.
Yeah.
The restroom, you could extend the master and the ADU for 475.
And people were like, that's so much. And now it's like 800, 900.
So just to show you, I mean, none of us have a crystal ball. We don't know what's going to happen. For those that have that plan or any plan that has the ADU, man, that is prime real estate. Just because it's cash flow, you know, it's perfect for people that have big families or they have family coming in. It's perfect for those that want to offset their mortgage and get some rental, some cash flow coming in. It is perfect for that. So that I'm jealous. But I think for the market updates, I hope you guys got valuable information off of that. We'd be happy to also create like some sort of a template to post on the Facebook group so you guys can visually see what those numbers are.
Yeah, let us know if y'all want some visuals and whatnot, and maybe we're here to serve as a resource for you guys. So if there's something that would be really useful, let us know so that we can bring it to you. That's really what we're doing.
Yeah. So other than that, we are pretty much going to end this live stream, guys. And before we do, if you could please do us a huge favor and like our YouTube channel. We are the Easton Park Neighborhood Specialists, and it's something new we're starting to hopefully bring, just like Gabby said, be a resource to you guys, bring you this information so you as homeowners can be in the know with what's going on here in Easton Park. Easton Park is a rather very unique community here in Southeast Austin. So there's definitely a lot of things that are going on different here, especially price points. So I'm hoping you can do us a favor and like and subscribe. On top of that, we are hosting karaoke night this Saturday from 6 p.m. to 8 p.m., 21 and up only. Bring your own beer or bring your own beverage, right? I will be happily drinking water because I'm on a diet. So I don't know. Yeah,
that river.
I'm dieting again, so no alcohol for me, but I will be drinking sparkling water. I don't know how I'm gonna get hype. I know Araceli, we're both gonna be emceeing this karaoke night, so hopefully I don't fumble and make
Y'all are gonna be fantastic. It's gonna be so much fun. I'm so bummed I can't be there.
Yeah, but so don't forget to dress up 90s, early 2000s. I will definitely come dressed up, and I look forward to seeing you all there. So we can hopefully formally meet in person, put a face to the name. But other than that, we are going to peace out, and I'm going to end this broadcast. Bye, guys.
Bye.
Bye.